I'm John Kaiser at the Metals Investor Forum, June 12th, 2022 in Toronto. I am here talking to Ken MacLeod, CEO of Sonoro Gold. Ken, welcome to Toronto.
Thank you, John. Pleasure seeing you again.
Ken, you recently updated your PEA. To what extent did the results include the drilling that you have done this year?
It did not include the drilling we did this year. We have drilled 7,000 meters since November of 2021, but it's not included in the PEA estimates. And the reason for that was that we had drilled to April of 2021, and all that data was incorporated into the PEA. And what we recently did was we did a mine optimization that streamlined the processing, which resulted in a reduced CapEx for the project and reduced OpEx as well. But we did not incorporate the 7,000 meters of new drilling because it hadn't been tabulated at that time. In fact, still has not been, and we expect to have an update on that in about 6 weeks' time.
Okay. So inflation has accelerated in the past year since you published the PEA in September. It's now 8.6%. As you did your review and updated the PEA, what did you observe were the sort of equipment and materials that were most impacted by the inflation that we're seeing, which is a generalized number?
Oh, absolutely. That was one of the considerations when we were doing the updated PEA. The most important thing for us was to reduce the capital costs. The intention has always been to mitigate against a very, very large capital raise at this tough time in the markets. So we were successful in redesigning the mine plan to initially start at 8,000 tons per day instead of the original 15,000 tons per day. That resulted in a significant saving, because in approximately $8 million of saving, along with the fact that we had tightened up the PEA from a plus or minus 25% factor to a much, much tighter plus or minus 15% factor. And as a result, that was based upon actual quotations from the equipment manufacturers and suppliers. And that enabled us then to pinpoint the costs with much, much greater accuracy. The first edition of the PEA was estimates conducted by our team in Mexico, and we added the 25% factor to it to ensure that we were within the bounds of reason as far as estimating was concerned. Now our costs are much, much tighter. We have written quotes. We have multiple quotes for the crusher, for example. And so it's a much more competitive process, and therefore we were able to reduce the capital costs. Now, we did take into account the fact that steel costs are higher. In fact, in some instances, steel costs are as much as 20% higher. The cost of the liner for the leach pad, it's gone up, not necessarily 20%, but it's more like 10%. And so how do we mitigate against these extra costs? Well, we decided that instead of, like I said at the beginning, at 15,000 tons a day, that would have meant that we would have the liner covering all 7 years of production. But now that we've broken it up into 2 phases for the liner, so we've cut the initial liner cost down by almost half. Therefore, the next phase, which would be between year 2 and year 3, we'll see the cost of the secondary part of the liner will be absorbed by the cash flow.
Okay, so as you're surveying the landscape, you're obviously working on the mining permit, which will be the kickoff for construction financing. You're watching also we're going to need to order equipment, have everything happen as soon as we have the money in the bank. But as you survey this landscape, this supply chain issue that everybody's talking about, what sort of equipment and materials do you see as potentially hung up? Not that it's like become super expensive, but that it's simply stuck in other jurisdictions and not happening. For example, China's zero COVID policy has got everything in lockdown. As you did your review or update, what did you observe in terms of what could delay the arrival of basic stuff you need for building this mine?
The longest lead item that we have are planning for is the purchase of the crusher. It's a three-stage crushing system: primary, secondary, and tertiary crusher. And the lead time for that is in the order of 32 to 40 weeks, depending on which manufacturer we're going to be purchasing from. Now, one manufacturer from Sweden is at the the longer end of that spectrum, and American manufacturers are shorter end of the spectrum. And so we have to factor that in. So if we are going to be in production in 2023, then we have to order that crusher sometime over the next 3 to 4 months. And so that's a plan of action right now, is that we're focusing on going forward with all the other elements to bring us to production in 2023, but keeping in mind that the crusher has to be ordered and a down payment has to be put down on the crusher even before we have the environmental permit in place. Now, the other aspect with the crusher is, and that's not factored into the cost for the PEA, or the capital cost in the PEA, is the fact that the crusher manufacturers are offering us leasing terms, which then is going to have a significant impact once again on the capital costs. But once again, the long lead time to order that is imminent. So we are looking at it very, very closely from the point of view of reducing the capital costs, but ordering the crusher at an earlier date. Now, the other long lead items, the liner, once again, but that's more like a 4 to 6 month lead time for that. So that's not an issue at this point in time. And the rest of the materials, I believe that 4 to 6 months is quite reasonable for the lead time for those. So I don't anticipate anything except making sure that the crusher has been ordered in a timely fashion.
Now, Sonoro Gold is unusual in that it is focused on fast track permitting and developing a mine, even though you have only 7 years of ore outlined for a 15,000 ton per day operation. But you are pursuing a strategy of we will keep drilling and expanding and feed this. But your key focus is let's get this into production, and then we can properly play the upside in the gold price as opposed to a simple optionality. Now, for me then the question is, these other obscure things such as water rights, surface rights, power, access rights, where are you in terms of nailing all those down so that when you get the permit and you get construction financing, you're ready to go right away?
Yeah, road access is relatively simple for us. We're entering the project area through a ranch that is controlled by a single rancher. And this particular rancher has been very, very helpful to us in construction of roads and drill pads and the determination of the best road access to enter into the project zone. Now, we currently have three potential routes to take into the project site. One is through the Cerro Prieto mine, which has been working well for us for the past few years. And the other one is it's a more rugged route, which would require upgrades, but is still quite acceptable. And then the third route is to the north of the Cerro Prieto mine, which enables us to access in probably the least disruptive manner to our neighbors, the Cerro Prieto mine. So the road access is sound and quite easy to solve. The transmission access is being conducted through a study with the CFE, the government electrical agency. And so we've been quite advanced with a study on that. We have determined the best route to take. And so that study will probably take another few months. And we should be in a position that by the time we actually start production, that the transmission line should be ready for energizing as well. The water rights, that's a very, very important issue. The water rights we've been working on that now for quite some time. We've secured 200,000 cubic meters of water rights from the rancher that we're operating under. And we need probably another 200 to 300,000 cubic meters per annum when we're up at 15,000 tons a day capacity. So these water rights are granted to you by the CONAGUA, the water agency for the federal government. And we are sitting on top of a major aquifer that supplies water for much of the district, much of the region actually. And this aquifer has capacity available to us. We've determined that with CONAGUA. And so we've submitted an application to CONAGUA for additional water rights. Now, we still have to drill the well into the aquifer to be able to provide us with that water supply. We have a location determined. We will be drilling in due course. Once again, our expectation is that we will have the water supply long before we actually start the plant operations. So that's the key element there. As far as having a camp is concerned, we have been dealing with lane drilling that are going to be supplying the camp for the next phase of drilling once we're in production. And the camp will be expanded to accommodate the construction crews as well. So I think all of the logistics are being taken care of and will be coalescing into the 2023 timeframe to make sure we're on time with the project the construction and development.
Okay, so last September, when you were part of the Metals Investor Forum, during the backstage interview, you were optimistic that you could have the mine permit in hand by the end of 2021. It's now almost middle of 2022. Why has it taken longer, and when do you expect to have the mining permit in hand, which is really a key hurdle to get the construction financing that you need to develop this mine?
Well, that's the $20 million question, of course. We were victims of our own success back in August of 2021. And my explanation for that is initially we had planned to have a 3,000 ton per day facility and then ramp up over time. But when we produced the PEA last August and the final document was issued out in end of October, we found out that the mine plan was capable of supporting at least 15,000 tons a day for a minimum 5-year life of mine. And as it turned out, it actually turned out to be a 7-year life of mine. So based upon that success story, and the drilling was so very effective that almost every hole was a hit for us. And so we assumed at that point, well, what's the point in constructing a 3,000 ton facility that is going to be instantaneously upgraded to up to 15,000 tons a day in year one? That's a waste of money. So then we started focusing on the environmental aspects of building the 15,000 ton a day plant. And the environmental conditions are much more stringent on that basis. Instead of dealing with the Hermosillo office of SEMARNAT, the environmental agency, we would have to deal with the Mexico City office and of course have to produce a complete environmental report. And I'm glad to say that there are no environmental issues that are of concern to us. And so far, from what we have understood, is no environmental issues of concern to the government. The other issues would be we're in a disturbed area. There are producing mines around us. Plus, Agnico Eagle has been drilling at the nearby Santa Gertrudis project for the past 3 years. So we're in a good company with Agnico Eagle, Bear Creek Mining, and Gold Group, so essentially 3 producing or soon-to-be producing mines. And we have a population. The nearest town would be 800 person town of Cucurpe, where we actually provide employment to many of the people in Cucurpe. Magdalena is 45 kilometers away. So we're not encumbered by intrusion into people's backyards. And the rancher that operates in our district, his ranch is over 5,000 hectares, and it covers the Cerro Prieto mine and will cover our mine as well. So we are in a zone that is effectively very friendly to mining. The people, the population in the area are very friendly. In fact, the state government, which recently changed, the new governor as of last November. And the state government is very supportive of the project, and they recognize that the creation of employment for the local population is significant with building a new mine. So I think we have support at every level of government and in the community to be able to bring this through the environmental process and the review process in a relatively short is a wrong word to use, because COVID has exerted severe constraints on the timing for permitting in Mexico, and many of the folks at SEMARNAT have been either laid off or have been working part-time. So the delays in the permitting have been they're severe, and there were over the past 2 years were severe. We're seeing an improvement now, but we're still estimating that what would normally take 90 days, we're doubling the estimate for approval. So we submitted the what's called the MIA, the application for the environmental permit. We submitted that at the end of April, and we're expecting approval around October. That's about a 6-month time frame. And if it takes into November, December, that's not an issue for us. We're not worried about a 1 or 2 months delay, because we're still intent on proceeding with the current engineering. The preliminary engineering has been completed, and we're in detailed engineering now, even prior to getting the environmental permit. So having a delay to the receipt of the environmental permit is not going to be a severe disruption to the time frame.
Okay, so the market has been ignoring the price of gold as though, 1850, wherever it is right now, isn't real. The future is it's going back to 1400 or something like that. So gold juniors, whether they're exploration or feasibility demonstration and trying to fast track development, have not gotten a lot of love from the market, which means your stock is trading around 15 cents right now. Construction financing, it's going to involve, I think, $30 million plus. And the market's concern is, are you going to have to do an equity financing that just dilutes the upside away and turns it into sort of a simple, 20% return on investment for the sources of the capital? What sort of financing structure are you exploring for, say you get the permit sometime later this year that avoids all this dilution from an equity financing?
That is a wonderful question, and the best answer I can give you is we've been working for 2 years on a particular project lender that has been working in lockstep with us and ticking off the boxes as each successive success, or as each element is achieved in the development of the project. So we fully expect that over the coming I'll give it 2 months or so, that we will be entering into an indicative term sheet with this project lender that will then enable us to start focusing on when the environmental permit is issued, that we will have the project finance in place. But in the meantime, we're doing this small equity raise in order to continue with property payments and meet some of the obligations between now and the environmental permit being put in place. But the key element is having the relationship with the project lender. Now, one of the things with respect to the equity component of project finance is there are many things we can do to mitigate against the dilution. One, of course, is we are contemplating on completing a further PEA once we have amassed the resource estimation and issued the news release on the new resource estimation, which I estimate will be the end of July, early August. That gives us the opportunity then to update the PEA. However, the elements in the PEA, the metallurgy, for example, it's been done to feasibility study standards because we're going into production with this metallurgical test that was done by McLennan Laboratories in Reno. The drilling has been done to 35-meter spacing, which gives us the opportunity to have essentially much of the project, if not all of it, in the measured and indicated category. So that qualifies for a pre-feasibility study standard. And then the final element is, of course, the mine plan. Now, the initial mine plan, as we talked about, was done to PEA level, plus or minus 25%. But we've been taking great pains now to make sure that we are able to meet the requirements of a pre-feasibility study if it's required by the lender. And that's the key element, is that if it's required by the lender. The issue there would be on a PEA basis, we will achieve a certain percentage of debt to equity ratio. But if we do a pre-feasibility study, we believe that the debt component will be larger. And so we're working hard to make sure that we deliver to the project lender the comfort that everything has been done to pre-feasibility study standard. And if we want to spend the extra $400,000 to get the signature on a pre-feasibility study, then we may have to bite the bullet and do that. So it's a matter of, it's going to take a little further time to complete a pre-feasibility study because of the type of scrutiny involved. But I would estimate that by October, we'll have that pre-feasibility study either in final form or in a ghosting form, where all the elements are done to pre-feasibility standard, and it's just requiring a signature at that point. And then the final element there, of course, is that once again the crusher has to be ordered probably prior to October in order for us to meet that deadline, our self-imposed deadline, to be in production by the end of 2023.
Okay, so the Cerro Caliche is a project that's had multiple owners in the past who looked at it. You have tackled it as an open pit mining scenario. You're next door to the Mercedes mine, which is an underground mining operation. It was owned by Premier Gold. They got taken over by Equinox Gold and spun out their Nevada assets. Equinox Gold has now sold the Mercedes mine to Bear Creek, which has been focused on its Peruvian projects where they've been hung up by social license issues. This is now their new flagship project. What are the implications for that overall district in which you are in, with Bear Creek coming into your neighborhood and saying, okay, this is now, we're going to take this Mercedes mine. It's not going to be a secondary project in somebody's portfolio. It's now our flagship project.
I think having Bear Creek in our neighborhood is a very positive development. In fact, the exploration team at Bear Creek and the development team are very, very strong. They're very honorable people. We believe that they add a tremendous value to the district. And the stronger that the Mercedes mine becomes, and it's a low self-adhesion epithermal system that we have here at Cerro Caliche as well, and it's only 8 kilometers away. And so by having them as neighbors, I think strengthens the district, enables the people to look at the district now with new eyes, and that we've got Santa Gertrudis being developed to the north, Mercedes hopefully being expanded to the southeast. Cerro Prieto mine, they've been drilling and expanding their operation. So as we bring more attention to this district here, I think it'll attract more attention from outside parties. Possibly, I know we have been approached by some of the major companies with a view to, looking at Cerro Caliche, but we're not interested in any kind of relationship with the majors at this point in time. Our goal is to get this into production. We have the team, we have the ability, we have the history of bringing projects through to production from early stage. And sure enough, we'll get this into production. At that point, if the conditions are right, we will talk to other parties. We will talk to neighbors. We will talk to major mining companies. But we have a task to do right now, and we're intent on taking this project through to production by the end of 2023, and we will do it, and I'm sure of it.
Now, right now, all these operations are standalone operations. Is there any sort of economic logic to consolidating the entire district under one owner who then harvests economies of scale from all the different operations?
There would be. I know there is one major mining company that's interested in doing that. But they're not aggressive enough at this point in time to be able for me to make an informed judgment. But having district-wide single entity controlling the entire area. I think it's a possibility, but it's not going to happen in the next 2 to 5 years, in my opinion. It's going to take time for the folks at the Mercedes mine to get a feel for the district, because they're newcomers into the area, and there are other projects that we've been looking at in the surrounding district that show merit, need further drilling. I think we're going to need somewhere in the order of 2 to 3 years of additional drilling in the surrounding area to be able to really classify it as a mega district. But we're heading in that direction. And if you take a look at Santa Gertrude, when Santa Gertrude eventually is put into production, it will elevate the district in a significant way, because having Agnico there as our neighbors will add a great degree of visibility to the project and to the district.
No.
I've got a bad throat here.
District consolidation is one thing, but what about country consolidation? We just saw AMLO consolidate the entire lithium potential, basically nationalizing it.
Yes.
Is this just a sort of single isolated event, or are we seeing a trend to Mexico nationalizing the mining industry?
We don't see that. We don't see that. And for example, Sonora State is in my opinion, and I think in most people's opinion, is the #1 mining jurisdiction in all of Mexico. It is reliant on gold and silver mining. There are over 25 major mines in gold and silver in Sonora State, and plus multiple smaller mines. And the state of Sonora and the new governor of Sonora are very supportive of the mining industry. So we don't see that happening. 40%, almost 40% of the gold that is produced in Mexico originates in Sonora State. And Mexico is the #8 gold producer in the world. So it's a significant amount of wealth that is generated by the gold and silver industry in Mexico. We don't see that changing.
Okay, well, that's good. I've been talking to Ken MacLeod of Sonoro Gold. Ken, thank you.
Thank you, John.